Welcome back, Alpha Hunters. Entering orders is a very easy part to overlook in trading. The problem is, this is the only way to interact with the market. If you mess up an order, it could leave you exposed in ways you didn't intend. So I'm going to show how to properly use different orders. See you on the green side. This video has timestamps down below for different orders, so feel free to skip to the order you want to learn about. Each order will have step-by-step instructions, things that make that order different, and an actual order execution. Later in the video, I will cover extra things to consider for Thinkorswim users, adjusting open orders, and advanced orders. And the stock I will be demoing all this on is AI. There are two types of orders: market and limit orders. All other orders use some kind of trigger to activate a market or limit order. There are two different types of triggers: fixed and moving. Do not overcomplicate the different names of the orders. Let's start by looking at just a basic market order. So a basic market order is pretty much as it says. It's whatever the current market price is trading at that moment in time, or the next available fill can happen. Okay, so when you look here, this is the order box in Thinkorswim, and I'm sure on platforms it's probably different for different platforms, but this is where you select your different orders. The top one is the market order, and what you want to notice right here in the price area, and you'll notice the difference when you look at different ones, and you'll notice the difference when you look at different orders. But the price here is MKT, which stands for market. So whatever the market would get you in at, that's what it would fill you at. So there's some pros and cons, okay, with the market order. The market order, one of the big pros is you get into your order gets executed immediately, or the next available time it can trade, it will fill your order, okay? Now, obviously that can be very useful, but here's a con that goes along with that pro is you're not in control of what the market fills you at. Now, it's not going to just give you just an awful fill. Hopefully not. I mean, it's not going to be like percentage points off. It's just you might get a little bit more slippage or a little bit of a bad fill just due to maybe a high influx of volume at that point in time, or volatility. So you might get a price fill that you didn't intend, okay? A good scenario to use, or a very good application to use a market order, is for potential stop losses. Now you'll notice here, I'm in my simulated trading session here for Thinkorswim simulated trading. So the data in simulated trading is actually delayed by about 20 minutes. But you'll notice over here to the right, I just have in the background Thinkorswim running here in the background, and I'm just using the Thinkorswim over top of it, so I can still see the order box. This is live data right here because this is Thinkorswim off to the right. But I'm able to, have up my order box here in Thinkorswim. So when I place a market order, and I'm just going to use one, I'm just going to buy one share. So right here is the bid and ask spread. Okay. So this is the bid. This is the ask. So I should get filled probably somewhere close to that 48.15 when I click confirm. So get confirm, hit send. And then up here, the field 48.12. Okay, up here. So if I look back at my, open this down here, fills only. My most recent fill is 48.12. Now I already put in some trades because I want to be able to have some volume there. That way, I can put in some trades as we need to exit positions just for demonstration purposes. But this is the most recent order that I just put in with that market at 48.12. So that was really close with what we were noticing, because the ask here was 48.15, but now it's moved up to 48.20. So already, man, it looks like I'm making money on this trade. I like it. Now, let's look to close out that position. Okay, so if you go to your monitor tab, find the position and right click on it, and then you can say create closing orders, and you can say sell, but I don't want to sell all that. I just want to sell one of those. I'm going to move this to market, and it should market me out around 48.22 or 17, something like that. We'll see. So hit send. 48.22. So it filled me at 48.22. So that is a typical market order. Okay. So let's talk about limit order. So here in the drop down or your settings area, just select limit order. Now you'll notice right away that the price box actually has a price there. It actually has a number and not just MKT. Okay, so this means we can actually put in a price. So since we can put in a price, we're basically telling the market with this order we want to get filled at whatever price we deem or better. Okay, so if we, for instance, this scenario, if we say fill me at 48.15 and the market jumps down to 48.10, well, they'll fill it at 48.10. So some of the pros and cons with the limit order, pro is obviously you get to control, you have more control over the price and fill that you want to get filled at. Kind of valuable in a volatile type market situations, maybe like early morning trading and stuff like that. The con is, well, if you were counting on a bigger move and you wanted a limit price and it doesn't quite fill you on the limit, well, the market could still move that you were counting on and you don't ever actually get into the order. Your trade doesn't ever execute. So that is a possibility. Okay, so some common applications for the limit order. You can actually use these both times, going into a trade and exiting. So you can open a trade with the limit order. You can also exit a trade with the limit order. Okay, so I'll show you some examples. So we'll see on the right side that the current market price is trading at 48.19, 48.24. So let's put in this for 48.15. We'll put that in 48.15, and we notice that it doesn't get filled. So it doesn't get filled because that's not where the market is trading at. Okay, so the market's trading up here. So I'm gonna cancel and replace, and what I'm gonna do is I'm gonna move it up 5 cents to see if I get filled at 48.20. I did not get filled at 48.20. So I'm going to move it up and say I want to get filled at 48.25. Should get filled here. Yep, there it is. So I got filled at 48.25. So that's how buying or entering a trade with a limit order works, right? You're only going to get filled at the price that you specify or better. Okay, so let's come back over to this order and let's create a closing order. And a good way to use this limit order when you're closing out trades is to say, hey, if it gets to a price level, kind of like a take profit. If it gets to a price level, I want to sell, I want to close out my position at that price or better. Okay, so in this instance, let's put in 48.35, and let's see if the market just kind of works its way up there while I kind of go over some of the pros and cons. Okay, the market just jumped. It would have done it. Raise it to 40. I'm going to hit send. And we'll see what the market does and see if it can get up there. So I'm kind of just watching the bid-ask spread here. So if the market gets up to 48.40, it'll fill. So some of the pros and cons here are if you enter a trade and you are long, and you're waiting for the market to kind of go up to a price point like we are kind of just in this little demonstration, Once it gets to that price point, for example, here 48.40, it will fill and I'll be able to take my profit. And I got in at 48.25 and I was able to get out at 48.40. Okay, so currently the market's not there yet, right? So this is where the limit order can have a little bit of a con because, well, it's not there. You know, we're not able to fill at 48.40. So this is where if the market turns around and reverses, well, my order never gets filled. Okay, so that is a con with the market orders, but it's still one of the most valuable orders to use, and I highly suggest you really knowing how to use this order because you can use this one on entering and exiting positions. So those are some common applications. Now let's just go ahead and adjust this one. Let's see if we can should be able to get down for 48.30. Yep. Okay. So there you go. Got out for 48.30. Okay. So that is the limit order. Stop order. If you change your settings over to stop order. Now, the way a stop order is different from the previous two is there is a trigger. Now, the next 3 trades after this, they all have triggers. Okay. So like I said in the beginning, there are 2 kinds of orders. There is market order and there are limit orders. And then there's just triggers that activate market or limit orders. So this second line down here is just a trigger. That's all that is. So once it gets to a price level, it activates the order, the actual order. This is a trigger. The second line down here is a trigger. This is the order. Okay? So once the trigger has been met, the order will become active. So let's go ahead and raise this trigger to 48.60, and I'm looking at the bid ask over here. Okay, and I can see that this would be above it. So if the price of the stock here, AI, were to get up to 48.60, it would activate the trigger and make this order live. So then I would buy whatever the market price would be. Okay, so let's go ahead and hit send. And you notice that it hasn't gone through. Okay, so it hasn't gone through, and what we're waiting on is the market to come up to this price point. So I'm going to adjust this down to see if we can get it to fill. So I'm still waiting. It's really close. It's just below where I just put it at 51 cents, at 48.51. And so let me talk about some pros and cons, see if this fills, okay? So all right, so there you go. So it just filled as the market had just moved up past 48.51. Now I didn't even see what we got filled at, so let me just look and see what we got filled. We actually got filled at 48.51. We got 100 shares. Bummer. I didn't really want to buy 100, but I'm in a demo account. It's fine. So let's look at how to close this. So we'll set that up. So we'll close 100 shares. So a stop limit. So the way a stop limit works. Now so let me talk about pros and cons and like a practical use of application here. Okay. So the pro is it's a trigger. Okay. And if you set a price at a level you want out, you don't care the price fill, this is where the stop order is really good. So if the market moves to a price level and you say, "Oh, that's my trigger," and you want it out at that price level, it will get you out at the market. So it might not be the best fill, right? Because that's a con on market orders, right? You don't have control over the price that you get filled at. So the stop, once the trigger gets met, you will your order will submit to the market, and you will get filled at what you get filled at. So a very common application for this in the real trading scenario is a stop loss. Okay, so as CI is moving up, let's say if we had a stop loss at maybe 55, 48.55, like 5 cents under here, and let's go ahead and submit that. Oh, it's still just right below. I mean, it's right below. I mean, it's at 48.55, but we're trying to execute more on this side of the price range of the bid-ask spread. But if the market was to come back down and trigger this 48.55, we would get filled at whatever the market would fill us at. In in the simulated trading scenario, we'd probably just get filled at 48.55. But just understand that that's different in real trading. You might get a little slippage. All right, but I'm gonna move this up and say we wanted 48.59. Let's go ahead and put that in. So okay, so 48.58 is our market fill. So our trigger activated. Okay, so our trigger activated, and then it submitted the market order and we got filled at 48.58. Okay, that's what I was doing. I was looking for fills. So we got filled at 48.58, and I know that's kind of small for you phone peeps, but we put in a trigger at 48.59. The market fell low enough, activated the trigger, and we actually filled at 48.59. Or 48.58 is what our actual fill was. Even though our trigger was at a different spot, this is where the market moved past our trigger just a bit and filled us at 48.58. So since we were in a long trade, we had a trigger below the market, and the market moved below our trigger just fast enough and filled us at 48.58. So these are really good in stop loss scenarios, like if you're losing on a trade, that kind of thing. These are really good because if the trade goes against you, you just kind of want to be out. You just want to be out of the trade. Okay. Next, let's talk about stop limit order. Okay. So stop limit order, stop limit. Okay. So you select that, and then you'll notice it looks very identical to the stop order. Except you actually get a price box here. So it's kind of like this bottom row down here is the trigger. Okay, so this is the trigger down here. And up here, this is your order. This is your actual order. Okay, so let's go ahead and fill in something here like 48.57. And 48.55. Okay, so so some of the pros and cons here. So the way this trigger works, I'm gonna go ahead and submit this. I'm gonna lower this volume to 1. So 48.57. I'm gonna raise this 5. Okay, so I'm gonna set that. So, okay. So I'm looking at the current market right now, 48.53 to 48.59. Okay. And our trigger is at 48.60. So it's got to get the bid side needs to get a little bit above 48.60 to activate the trigger. And then what this limit is, so this would activate the order. Okay, the 48.60, once it meets that trigger, it would then activate the order. Okay, and the order would then be set at, okay, so there it is. Okay, so we just got filled. All right, so the order was then at 48.57. So what needed to happen was the market had to go up to 48.60 and then come back down to my limit and fill me at 48.57, right? Because that was the order, 48.57 or better. And it actually filled me at the better. It actually filled me at 48.55. Okay? So that's how a stop limit works. You have a limit to say, hey, I want you to activate once you get to a price. It then activates the order, and the order limit, it will not fill until the limit has been met. Okay, so some pros and cons here. So obviously you kind of have two prices that you got to monitor. So in the beginning, this can be a little confusing. It's like which one's which. Just understand that the second line here, this is the trigger. You know, just like on the stop, the second line that pops up here, this is the trigger. So it's got to meet that condition before this order gets active, and then you got this price. Now you can set this price above, above your trigger. Okay, so like the quick pro to this is you are looking for maybe for a breakout, but you still want to get a good price on your order entry. These are really good. These orders are actually really good for if you see a very clear support or resistance area, and if the market is to flush and jump through that support or resistance, and it will happen. You'll see it from time to time. As it goes through the resistance or support, it can kind of jump price levels, and that is where if you have your trigger just above the resistance or below the support, it activates your trigger, but your limit will keep you from getting a bad fill if the market is to jump too far. Like, hey, I don't want to get filled that far away. I want to get filled maybe like right here, right as it breaks out, but I don't want to get filled too far away. And that's perfectly logical, right? It makes perfect sense to do that. So that's pretty much a stop order. That's kind of how one works. But you know, the con is that you can definitely miss out on the whole trade as it activates the trigger, but you have a limit sitting there then to say, hey, fill me at this or better, and it just never comes back down to fill your to fill your limit order. And you know, it's fine. You want to control what you can control. So I'm gonna make a closing order here, and of one share. Okay, so I can't really think of a situation where you would want to use this in a closing order. But not to say that you couldn't do it. I would say probably more for order entries into like getting into possible breakout areas and that kind of thing. Let me see. Set the trigger at 2. Make the price then 48. No. 60. Yeah, 68. No, all right. So I'll just set that up. Boom. So what I'm asking the market to do is trigger my order if it gets below 48.62, but I want a limit fill at 48.68 or better, which in this case would be higher. Okay. So currently the market's kind of moving away, so that's the kind of thing is it hasn't hit my trigger yet. Let's go see if we can make this trigger. So, okay, perfect. Let's say it's at 48.60. So let's say we had a trigger at 48.67. And, okay, confirm send, boom. Okay, so in this scenario, what I wanted to do was set the trigger at 48.68. So the trigger should be active, so the order should be active. Okay? And then now what I'm asking is I want to get filled at 48.72 or better. I wouldn't use this for like a possible stop loss situation. I'd much rather use the stop order, because if the market's dropping like how it is now, like it went down, it hit my trigger, but now it's just moving away from my limit. Okay, so that is not like good. So now you just kind of continue to take losses while the market continues to kind of move away from you. Okay, so that is something that you don't want to do. Like if the market's just not moving in your favor, you just don't want to be in it. You don't want some limit hitting or preventing you from getting out. Okay, so so that's the trigger. We'll set it down there. So let's say in this situation, let's say this. Let's say this market's coming down. Okay, the price of the market is coming down, and it gets below 48.68, which currently is. So it activates the trigger, but I don't want the market moving too far too fast to where I get a bad fill, and let's say I would want to get filled within like 10 cents. You can set that up. So your trigger is set at 48.68, and then you got your limit order here at 48.58. So let's see if that will. Okay, so that did fill. So obviously it filled at 48.67 because that's pretty much where the market was, but I had the trigger a little bit higher. But that's how that works, okay? You want to be very careful about using that limit side of it. If you really want out of a trade and it gets to a price level, yeah, I would just get out. But I would say it's probably going to be more good on possible breakout type scenarios than a protective stop loss type scenario, okay? Trailing stop loss. So like the previous two orders we just looked at, we have a trigger, okay? And then it activates a market order. Okay, so the market order, we will not get the price that we want, but the trigger we can control. So I'm going to set this at like really low. So right now, the way you set this up, okay, is you have a couple different trailing stops here on this trigger. So this is a moving trigger, okay? So it will move with the stock, okay? Now the most common one, there's two common ones that are used. You can use a percentage one. This would be not really for day trading. I wouldn't use this one for day trading, but you could possibly use this for like swing trading or longer, medium to longer term type positions. So you could say if it falls 3% from its all-time high, I want out. Yeah, that kind of thing. But in many instances, a good one to use will be this straight dollar or straight point trigger, and so it will trail 0.03 the mark. Okay, so you can set it at bid or mark. I usually always set it at mark, and as the mark drops goes down, my trigger will be 3 cents above it. Okay, so I'm going to confirm and send, and then it will fill me at the market. So I'm going to confirm and send. So right here, the standard price, 48.74. So I want to bring this back up so we can talk through the order. The trailing stop is at 48.74. Okay. Now it might continue to move down as this market moves down. We'll see. But once the market goes down and once it stops going down and gets to a low and then starts to move back up, I just need the market to move back up 3 cents before activating my market order here. Okay. So I'm kind of hoping the market here moves down so we can see. Okay, so there we go. So it just moved down to 48.68. Okay, okay. Wow, that happened really quick. if you can pause the video, go back and just kind of look at the as the price changed on that order. And what you were kind of wanting to see is that floating, it floated down to like 48, 60 something, and then the market quickly bought back up, went above my trailing trigger, and then activated my market order. Okay, so that is some way that you can use this. Now, I wouldn't use this to get into positions too often. I don't really think of like a good application to use that. But a really good application to use that is for stop losses. Okay, because as I'm going to put 100 in for the order. So the really good application for this, for a trail stop, so let's trail stop. So we're going to have a trail stop 10 cents, 10 for 5 cents below the current mark, and then it'll get us out at the market. So right now, if we put this in, it will be, there you go, it's 5 cents below the current mark, which is, our stop is 48.65. That's where our trigger is, 48.65. So I'm kind of hoping this pushes up just a few cents and we can see this move again. But this is the best scenario to kind of use this, is kind of like another stop loss, but it's a floating type stop loss, to where it just kind of trails up the market. So it's already moved up from 48.65 to 48.68 now. So as this market continues to push up, now it's at 48.70. So this is very useful in day swing, long-term type trading, as it just allows your stop saying, hey, you know what, ride up with the good times. And then once it changes direction, like, I don't know how long the change of direction is going to last, but get me out. Get me out of the market. Get me out of the market. Okay? So this is one thing that's very cool. So like, you also don't have to worry about coming in here and adjusting your stops like you do with a stop order. You know, if you want to move your stop loss order up with a manual trigger, you got to come in here and move it up with a manual trigger. So that's where this actually is a better scenario. That's a big pro for this one. The trailing moves up. Okay. Now a con is really, it takes into account whatever parameters you put in. Up, there it is. So it came back down. So it jumped up, and I didn't even see like the price it actually got up to. You can rewind it. So you saw it get up to a specific price, and then the market came back down through that price and then activated the market order, or through the trigger and activated the market order. Okay? But so one of the cons though is as traders, we kind of trade on technical analysis, and this is just a straight point, you know, so it's just the parameters that you input is the parameters it's going to use. It's not going to use like technical analysis and charting and look for support and resistance. Whatever the parameter is that you put in for this trigger, that is going to be it. This is a very good order to use for a stop loss. You know, if like you have something moving in your favor and you're going to go to lunch, or you're like, you know what, I'm just going to set a trailing stop loss. I'm done with it. I'm just going to set a trailing stop loss for 20 cents and let it go. You know, perfect. That's perfect. Just set a trailing stop loss, 20 cents. All right, let it go. I'm done with it. You know, if you get into like those kinds of moves where it's like, yep, I'm cool with this move. I'm just going to set a trailing stop, however far it goes, or something like that. And then once it pulls back, I'll be happy with whatever gains I got. That's a great scenario. Okay. Trail stop limit. Now, I don't use this trail stop limit too often, but there could be a good situation like with the trail stop that could be kind of useful. Okay. So like, you are able to just like with the trail stop, you have a floating stop here. Okay, so right now we have it set to 3 cents above the current mark, and the mark is what, like 40? It looks like 40, probably 48.80. So let's make it 5 cents above the mark, and the price we want to get in at is $48.85. Okay. So right now the current mark, the current stop is at $48.85. So if the market pushes down here, you'll see the price, this stop here, or this trigger, it will go down to 48. Probably just go lower. So we'll see if that works. The reason why I don't use this one, it's just not too useful to my trading. But like a good scenario could be like mostly on the stop loss type side. Okay, so there you go. So you saw the mark has moved down, so my trigger has moved down to 48.79. So the mark is now at like 48.77. And it is probably really close to getting filled. And then it'll enter a limit order at 48.85. So I will get. So it could be kind of beneficial on stop loss. So it could be beneficial on stop losses, as let's say I know the market's at 48.70, but I'm going to put in a trailing stop for like 5 cents. Like I know I could be able to get out of like this trade right here, at 48.60, but I'll put in a 5-cent trailing stop and let it ride up and then get out. But I want to make sure the market doesn't jack around with my pricing like it can. Like if liquidity just gets sucked out for whatever for like half a second, and you don't want to get like a super bad fill, and you just say, hey, I want to be out at 48.60 or better. And it's one of those things that's very logical use of it, especially if you're just going to step away. Very logical. But I would be very careful with how close you have your limit to a possible, like whenever you start your trailing stop, because if you walk away and it activates your trigger but gets under your limit immediately, then your limit never gets filled, right? So if it never gets filled, then okay, so we just got filled as it finally came. It went down far enough. Our trailing stop went down, and it came up, and then it filled us at 48.60. Or no, actually, that was not. It was 48.85, I think is. So let's look at closing out this position, because this is where I think it'd probably be more useful. Trail stop limit. Okay, so our mark, we're going to make it pretty close. 80. So I'm going to go ahead and put in for 48, a trail stop of 3 cents, okay, from the mark. So right now the mark's probably around 48.77 or so. So 3 cents into that would be like 74. And then, but I want to limit out at 48.80 or better, which would be above in this scenario. Okay, so we see the trigger floating here, 48.77, and then we have a fill here. So in this scenario, what you really don't want to do is you kind of don't want to do how I set it up. I did that for a reason. Because if the market comes down, it hits my trigger, but now I want to get filled at 48.80 or better. In this scenario, it would be higher. it could turn around and start going down, and it never actually get up to my limit. Right? It's still just basically a limit order. We just have a trigger down here that's triggering the limit order, a trailing stop. So in this scenario, you got to be real careful with how you do that. I actually wouldn't do that. I'll give yourself plenty of room and say, hey, you know what? I'm cool with however you do your trailing. I'm just going to follow the market 5 cents below. But I want to make sure that the market doesn't do anything like dumb and illiquid and just like whip down to like 47 or something like that. So you just put in like 40, 48.50. It's clearly I'd be able to get that. Just confirm and send. So now I'm trailing. 5 cents below, and right now it's at 48.75. But I'm looking for it to pull back 5 cents. There we go, triggers. So pull back. I was able to pull back 5 cents. It hit my trigger, and then activated the limit. But my limit was so low at 48.50 that I wanted to make sure I just didn't get filled below 48.50. Just like on a bad liquidity time frame or situation in the market. Okay, so that is the trailing stop limit. Okay, it'd probably be mostly used for a trailing stop loss. Okay, but you just need to make sure your limit order is not in competition really with your trigger. You want your trigger to work, but you want your limit to make sure, like if there's a liquidity issue in the market or something happens, or liquidity is sucked out, that you don't get like an absolutely ferocious fill in just like half a second. You just want it to kind of just keep you from getting a bad fill, just like a horrible fill. So that's pretty much probably the best applicational use I can think of it. But pros and cons, yeah, I mean, it's a limit order, so it can definitely, the market can move against you, move against your limit, and never come back. Okay, so yeah, you just definitely want to make sure you get the limit price set how you want it to be. Okay, but can be very useful. I just don't do this because if something hits my trigger, I would rather be out, which is why I prefer the the trail stop. So here's some. I'm just gonna walk through some extra things for people. Whenever you're gonna do an order, make sure you're on the right symbol. When your order box pops up, make sure you're on the right symbol. Sometimes you're looking at different things, and you might have had an order in here from a previous symbol that you were looking at. So make sure you're on the right symbol that you're looking to trade. Position effect, you can always leave this as auto. This is a great. I'm really glad they put that in. Here is your quantity box. So this is where you put in how many shares you want to buy or sell. You can also change it to percentage of account or position and dollars. So if you want to buy $1,300, it will buy you $1,300 worth of shares, but it will not go over $1,300. So if it gets to like 1,298, it will not go over that 1,300. It will go up to 1,300. Okay, so, but more often than not, you're probably just going to use the number of shares here. The side you're trying to do is the buy and sell. It'll just flip. Sell will be negative, buy will be positive. You can also swap the number in here. Okay, spread, don't worry about that. That'll be covered in options. Another thing is over here on the order, you might on the limit orders, you'll see this unlock here. If you lock this in, the price here will not float. Okay, so if you unlock that and you manually enter a trade, your price, you see how it went to a lock. Okay. Another way, and if you unlock it, it'll just go back to the natural down here, so you can actually see where your price is. If you click down here, you can move it around and put it on the price you want. If you want to be like within the scale, within the bid-ask range area, so that's the way you kind of move around the price. And you have TIF. This is time in force. Okay, so if you're doing day trades, you want to have it on day. This will be the default, just so you know. So if you do want it to go longer, like for possible swing trades that you want to have open for maybe a couple days to weeks, or you have closing orders on swing trades, you definitely want to have those on for good till cancel. That's GTC. Extended hours, EXT. So this would be before market and after market, EXT. Good till cancel, extended hours. So this will do your order during the normal market and extended hours before and post market. So that's what all that means. Good till cancel, definitely stop losses on swing trades and stop losses, on swing trades and stuff like that. Another way you can possibly put in triggers is in here. It's the widget right here at the end. You just click on that widget and you get this kind of order box or the order rules to pop up, and down here you have conditions. This is another area where if you want to set up triggers, you can do that in here. But the cool thing about doing it in here is you don't have to tie it to just the same symbol you have. So you can actually tie it to the SPY mark and then enter threshold, maybe like I don't know, 480, so you can do that. Also, if you want to have in a swing trade and you're like, I only want this swing trade, maybe a buy order open, but you only want to have it open for a week, or by the end of next week, you can just come down to the calendar and just click by the end of the next week. If it doesn't fill by the end of next week, then it's like, I don't want to end the trade anymore. So yeah, there's definitely different scenarios for that. Even on this cancel side, you can actually have different symbols. But if it gets below a certain price, you can actually cancel this whole trade, and it'll just cancel out this whole trade. So yeah, it's very useful stuff in there. So let's look at changing or adjusting open orders. So what I was doing earlier, if you were watching through, you're like, I don't know how you're doing that. So I was right-clicking on the order, and I was going to cancel replace order, and then popping up, just a normal-looking order box. Now you get the second line here because it's tying it to the previous open, the order you have open. So that's what it's kind of saying, hey, it's tied to this order that's going to cancel out the previous order. Now, when you're doing this, what's kind of important to know is you haven't closed out this trade. So this trade is actually still sitting there, and it is open and it's trying to fill. So if you're wanting to really close out that trade, then you need to close out of that trade and then reopen and then go through the order, open up another order again. But if you want to just edit it and you're like, okay, well, it might not get down to 48.50. Let me raise it up to 48, 63, and I'm okay with that. And then enter it, and then boom, I get filled at 48.63. You can do something like that, but yeah, if you have an open order, it's not gone, or it's still trying to fill. Let me show you real quick. Um, 70. So yeah, when you have an open order down here, and you don't want that open order to be there, you can just hit cancel order, and then boom, it's canceled. And then go back and just make another order again. Right? So yeah, when you got this open order, you can hit cancel order, or what you could actually do, because I know sometimes some of these trades are kind of hard and they can be kind of a pain to kind of set up, is you can go into create duplicate order and then cancel order, and then you are back at your original order template, and then you can adjust what you need to adjust. Okay, so that is a possibility scenario for you. So I'll just say a limit of 50. Boom, it filled me out at 53. That's what I wanted. Excellent. So that's how you do it, adjust open orders. So now I want to talk about how to do advanced orders. So this box over here, advanced orders, I'm not going to get too much into the complications here of advanced orders. But if you open this box, now because, right, all we've been messing around with in this video is the single order. But if you open this and open first triggers OCO, this is actually a really good order to do for a trade, for, you know, that you have an entry, you have a stop loss, and you have a take profit. So when you first triggers OCO, you can actually right click on this trade and then create opposite order, and then right click and then create duplicate order. And what we're going to do is we're going to set up a limit buy at 48.50. Let's say a stop loss. Okay. 48.50. Set up a stop loss at 48.25, and we'll set up a stop. Okay, so we got a stop loss with a trigger 48.25. So once it gets to 48.25, it would market us out, and then we have a limit here, 48.75. Okay, so it's going to have to fill us at 48.50 or better, and then once this first order gets filled, this OCO, which stands for order cancels other, or order cancels order, or one cancels other. I've heard it called so many different things, but that's what it stands for. Okay, so you'll have this first one, and then these two trades down here actually, yeah. So these two red trades down here, these will cancel each other upon whichever one gets filled. Okay, so we need this 48.50 to get filled, and then these two will be active. And then whichever one out of these two gets filled, the other one will be canceled out. Will just be canceled. Okay. So let's go ahead and try to raise this to 55. And then I'm going to hit confirm and send, boom. Okay. So now you see down here, status, they're both working. Both of these orders are working. Okay. So now if we want to edit, now you see over here, if you want to see like how they're linked, is you see they're over here on the left side, they're linked. They got a link there. And you also see OCO here in the name on both of them. So if we want to move either one of these, so we want to cancel replace order. So we want to move up the stop loss. We want to move it up to maybe 45. So there you go. So stop loss has been moved up to 48.45. And then the limit fill, we'll move this down to 48.60. I'll do 57. And so that's how you would edit or adjust an OCO. But yeah, I mean, so they're still linked. So we have now adjusted both sides of the OCO to where our take profit is now sitting at, or our take profit order, which is a limit order, sitting at 48.57 down here. And our stop loss with a trigger at 48.45, which is a market out. So if the market winds up dropping to 48, market over here, if it winds up dropping to 48.45, it will then market us, give us a market order to get out at whatever the market fills us at. So we'll see if it's getting close to actually getting to our, there it is. So, and then, okay, so you saw that. So the other order got canceled. So that's what I wanted you to see. So the other order got canceled. We got filled on a limit sell at 48.57, and the other order got canceled. So this order, this first trigger's OCO, is really good for a whole trade, right? Because you're going to have an entry, you're going to have a stop loss, right? And that's this one with the trigger, and then the market order, okay, and then your take profit, which is the limit. So we want to buy. So what this order, the whole thing is saying is we want to buy at 48.51 or better. If it winds up dropping to 48.20, we put in a market order to get out. If it winds up rising and getting above 48.90, we would get out for our profit. Okay. So that's how you use first trigger's OCO. Okay, these are very great to set up for your whole trade. That way, as soon as you get into a trade, you already have a stop loss in place and a take profit in place. Now, if you want to, if you already have a position open but you don't have a stop loss on it, you can just right click on it, create a closing order with OCO bracket. Boom, that's exactly what you'd want to do. And then here's your limit. So this would be your take profit. Okay. So let's say take profit. We would set it at 48.50, and then we'd have our trigger at 48.35, 38. Confirm, send, boom. Okay. So there you go. We have a take profit, a limit fill at 48.50 or higher, and we have a trigger which just hit the trigger at 48.37. I forget where I put it at, 48.37 or 48.35. Hit the trigger and it marketed us out. So that's how you can use OCOs, whether you have positions open already or not. And we made a solid $26.74 during this demonstration. Trading, man. It's I wasn't trying to make money. I was just trying to show you guys, but that's just kind of how trading is sometimes. I don't even mean to make money, you make money. So, but I hope you guys enjoyed this. But yeah, I mean, using OCOs, first triggers OCOs is really good. That way you already have your protection set up and your take profit set up as soon as you get into the trade. If you have positions open, go ahead and set up an OCO. Like if you have an idea of where you have a stop loss at, take profit at, set up an OCO bracket on them. That way, you don't have to worry about having too much risk out there that you're not sure of. Now, I wouldn't set up complicated orders like more than just like the first trigger's OCO. I would like that one would be fine, but like all these other ones, really take your time to get to know. But I wouldn't mess around and I wouldn't set up complicated orders for day trading outside of the first trigger's OCO. Because if you mess something up and it doesn't trigger correctly, you could be exposed, overexposed for risk. Okay. Also, in day trading, speed is rather important, and sometimes these more complicated orders, they can take a little bit of time to set up. So for day trading, just stick with the basic market, limit, and stop orders, and setting up the first OCO. And I think you'll be great, and that'll be spot on. But if you want to do some more complicated stuff, maybe on swing trading, because it takes a little bit more time to kind of fully understand how you're setting those up, feel free to do that. Alrighty, take care, Alpha Hunters.